This conference will now be recorded.
Okay, fine. So we have reached till the point at the period open. So the AAP period open, and we have even discussed about the dashboard that those are available in the AP side of it, right? So how did we reach to the AP? We have provided the data access. We have provided the role in first place for the accounts payable related roles, and then we have provided the data access for which business unit the user has to create the transactions, AP transactions, right? For those to be able to achieve that, we have given the data access. We have given the business unit data access to the user, so that the user should be able to book the invoice transactions for that business unit, right? So let us go and create a transaction in first place. There is some background noise.
Tirupati, yesterday there are two workbenches only, like invoices and payments only. So how this was arrived, payables dashboard? Is there any role to assign for this payables dashboard?
Just give me 1 minute. There is some background noise. Fine. So the as I said, the access to the AP, the workbenches is specifically it is defined by your role, because we have assigned the accounts payables manager role. So if you remember, when we go and check on the user level, when we try to assign the GL roles, there were already roles are assigned to the user. That is why you are able to see the dashboards when we initially went into the application, right? So basically, your invoice and payables. So those access, I mean those info tiles, the work areas will get enabled depends upon the role access that is given to the user. Okay. So for invoice, for AP invoice, you have a role, AP invoice supervisor. That is what we have discussed yesterday. And similarly, for payables also, accounts payables payment supervisor is the role, and there is another manager role that we call as accounts payable manager, which gives access to the both accounts payable, invoice and payments workbench area, both parts of the AP. Fine. So this is how your invoice looks like. So let me reopen. Okay. So if you look at this invoice structure, so basically this is how your invoice structure looks like in Oracle. Okay. Invoice at top level, there will be an invoice header, and there are certain mandatory fields which you need to be punched in while creating the invoice in the applications. Okay. So what is the structure? Invoice will have lines will have structures. So let me mark over here. Invoice structure is invoice headers, right? Headers will have lines. Okay. Lines will which is we call a invoice lines. Okay. Lines will have distributions, right? So this is your invoice structure, and whatever the data, whatever the invoice you are creating, or you are importing, right? Maybe the invoice can be created manually, or the invoice can be imported from the external systems, right? So in all these cases, the invoice structure should remain same. Invoice should have a invoice header should have some mandatory attributes or data fields that gets captured as part of the invoice headers, and invoice one for each invoice there will be only one header, invoice header, right? So one invoice header can have multiple lines, okay, and one line can have multiple distributions, okay. So again, each of these three components of your invoice are going to track few of the data elements, few of the data components of the invoice creation process, or then invoice can a legal invoice, how it should look like, okay. So what are those components we will see, and we'll try to create invoice for in today's session, okay. So as I said, this is the invoice header, and invoice header, basically what we are doing, we have defined the invoice structure at business unit level, right? And the business unit, the configurations we have done at the business unit level, where is the where is the logical entity where the operation takes place, right? Business unit is the one of the mandatory option, which means this invoice belongs to which business unit. And then the supplier and the supplier site details, from which supplier and which site of this supplier has issued you the invoice, right? Those information you need to select from the list of values. Then invoice number and the amount. Why the invoice number is not getting generated in Oracle, payables? Because whatever the invoice we are creating in the Oracle applications is basically the based on the invoice issued by the supplier, right? So the invoice number is basically is given by the supplier himself, right? When you go and purchase something, right? So the invoice, whatever the invoice you get, that is, that invoice number will be having this predefined number, right? That number is getting generated out of the system which is used by the vendor who has sold the goods, right? So in this case, the supplier, the invoice number is going to be generated out of the supplier system, and that invoice number that invoice number we will be using in the system just for the reference purpose. What is the invoice number against which the payment has to be generated, against which the supplier needs to be paid, right? So just it got closed, just let me reopen, right? So let me go and select the invoice details. While explaining, let me fill up the data and we'll discuss in detail, okay. So let us select the business unit. So when for this user, if you remember, we have provided the data access for this user to access only the business unit vision, sorry, the Apple BU, Apple USB, right? How come the user able to see the rest of the all the BUs that exist in the majority of the BUs, not all the BUs, I can say majority of the BUs that exist in the application, right? How come this is exist is because while creating the business unit, we have given a reference data set as common, right? So what is the purpose of the reference data set? The reference data set purpose is to share the configurations across your business units, right? So what happens is this is a limitation from the Oracle side, or any, I can say, an intended functionality. Maybe from our perspective it is limitation, but from a technical and table architecture perspective, it is an intended functionality from Oracle side, okay. So whatever the business units that exist in the that are created with the common set are going to be displayed in your business unit list of values, okay. So then How do you restrict? So my user, it is not fair, right? We have implemented an costly ERP to the customer and saying that because of the common set that we have used, we cannot tell to the customer that saying that because of that the user will be able to access all the business unit, but it is the user responsibility who has to select the proper business unit. That is not the case, right? As a consultant, the access as a consultant we should provide a solution to restrict such scenarios, right? Then how do you do that, right? So here what is happening, Apple USBU, right? Assume that we have even configured the beats BU. We haven't configured, but beats BU, right? So these two these two business units are created with the RDS reference data set as common, and the user Apple is being able to access to these two business units, right? If assume that if the common instead of reference data set instead of common, if you have created an Apple RDS and beats RDS, right? Assume that if you have created the reference data business unit with the custom reference data set, the business unit specific reference data sets, right? If that is the case, then you will not be able to see the business units, all the business units in this list of values. Okay. So to to as we are practicing, as we are learning Oracle application, then as we are learning application, we have chosen the option to choose the common reference data set, right? So to overcome this issue, there are two options which we can do. One of them is the workaround, one of them is the just the bypass the invoice the business unit selection process. Okay. One is the custom role creation. Okay. Custom role creation. Another one is the defaulting the business unit business unit name on the invoice form. Okay. So so what happens when you create a custom role? So what do you do? Basically we will see that as well in the coming session. What is the basically custom role? Custom, how do you customize a role? Basically we have assigned the accounts payables invoice supervisor role to the user Apple, right? So while creating a custom role, what we can do is we can take the replica, we can just copy the existing role accounts payables invoice supervisor. I'll be copying that role and I'll rename it as Apple Apple AP invoice role, right? Inside of this role, I'll be assigning the business unit. So there are certain, again, while creating the custom role, there are certain process which you need to follow. One of them is the business unit. Okay. So for this role, right, for this role, if you assign the business unit, then the access to this access to the user by using this role will be specific to this specific business unit. This is one of the way where you can achieve. We will see that we will create a custom role going forward in the next sessions, and we will create a new user, and for that user we will assign the custom role. The expectation should be that user should be able to access only one business unit. That is one of the option, and the other option is the defaulting the business unit on the invoice form. Okay. So how you can do that? See, while creating your invoice, so business unit option, business unit value, the corresponding value we are selecting, right? Instead of selecting that, we can default so that the user at this defaulting also we will be doing at the user level, and the user don't need to override this value. That's it, the just the bypassing the invoicing, the bypassing the business unit value selection. Okay, so let us let us select the supplier from the list of values, right? And the site, what is the site this supplier is being assigned. So let us say if the supplier site automatically got defaulted because against this supplier with this combination of business unit we had created only one site. If there are multiple sites, then it will ask you to select the site from the list of values. Okay, so just give me the let us give the invoice number, right? So, and the amount call the invoice USD currency automatically got defaulted here. How come system knows this needs to be created in USD invoice? If you remember, while selecting the invoice options, we had created the invoice currency and payment currency as USD. Okay, from the invoice options, it is getting defaulted the currency. If you assume if you have nothing specified over there, then this field will be empty. It is your job to select the currency. Okay, and assume that if you have for this supplier, for this BHL limited supplier, the same currency also can be defined at the supplier site level, supplier and supplier site level also. Okay, assume if you have given at supplier site level the currency as INR, then whenever you try to create a supplier, whenever try to create an invoice against the supplier, the currency would be defaulting from the supplier side, which is INR if you have assigned as INR. Okay, even though you have the invoice, even though the invoice currency is being set as USD at the invoice options, and assume that the invoice currency at the supplier site is defined something else, whatever the something else you define at site will get default on yours, because the site value will takes precedence over the value which we define at the invoice options. Okay, so when you create an invoice application, what application checks is, as soon as you select the supplier side, it checks at the default. Have you created any purchasing on invoice defaults at supplier site level? If something is defined at the site level, it pulls the values from the supplier side. If nothing is specified at the site level, then it go and check into the invoice options. Okay, if something is defined at the invoice option as default values, those will be pulled and displayed on your invoice form. If nothing is specified on the invoice, then it is your job to select the value from the list of values. Clear? So just give the invoice amount. Okay, so I'm creating an invoice for this 100 USD dollars, 100 USD dollars. Okay, so the type, if you check this type, there is a standard prepayment, debit memo, credit memo, and retainage release. So these are the various invoice types that you will be creating manually from the application UIs. Okay, each of this transaction type has its own business process to be fulfilled. The standard invoice is the normal invoice whatever you get from the supplier for the services or the products you rendered. Okay, and then what is this debit memo and credit memo? Debit or credit memo, both are used for, both serves the same purpose, but this origination point is different. Okay, suppose uh, suppose you have purchased some procured some material from the vendor, and some of them the shipped goods, some of the shipped goods are having the defects, right? So for that purpose, what you do, you refund that, you return that material to the supplier, right? So in that case, what you do, since if you as a company, the person who procured has identified In that case you will be creating a debit memo, right? If the supplier himself identified that something needs to be something got refunded, something that got damaged, maybe the supplier has you have ordered 100 quantity, but the supplier has shipped only 98 quantity, but he has issued the invoice for 100 quantity, and later he realized that the bus I had shipped only 98 quantity. The whatever the excess amount, that excess amount for two quantity amount that I had issued invoice has to be reduced, right? Even for that purpose you can go and create a credit memo. Okay, both reduce the liability, right? Whether your supplier returns, where you return the goods to the supplier, or maybe the excess payment, the invoice for which the excess payment invoice has been issued, both the cases the liability, whatever the our liability which we need to pay, is going to be reduced, right? So both debit memo and credit memo reduces the liability, but it is the source from which source the transaction gets initiated. That is what the just to differentiate that process, we have two types of transactions in Oracle payables. Then the prepayment invoice is about uh, this we discussed in short, right? When you make advance payment to the supplier, in that case how do you make a payment? Without invoice you cannot pay in Oracle. That is the thumb rule. If I if I'm procuring some material from a vendor, but the vendor has a demanding that you need to pay me in advance, right? You need to pay me in advance, and the vendor hasn't issued any what do you call the invoice, right? Vendor hasn't issued the invoice because he hasn't shipped the material itself, but you need to make the payment to the vendor. How do you do that? You create a prepayment invoice inside of your application. Against that prepayment invoice you make the payment, and when the actual invoice from the vendor gets arrived, you create a standard invoice and you will apply that prepayment invoice to the standard invoice. That is how the prepayment functionality works. Retainage release is kind of a situation uh, where the uh, the payment will be retained until the certain amount of payment will be retained until it meets certain conditions. Okay, so let us say you are into an a contractual you are into an contract, and maybe it is service, maybe it is let us say an IT what do you call the IT outsourcing. Okay, let us say you are running a consultancy, and you are running a consultancy, or you have deployed two IT professionals somewhere, and my term says that the person until the 6 months I'll be retaining some percentage of amount to the consultancy, and I'll repay after 6 months. Maybe that is the terms. And the best example may be in the construction, right? You have gotten let us say you are working on an construction, and until the certain phase 20% of the until you construct 20%, I'll be not paying anything. Okay, until you make the 20% construction you give me an invoice, and from that invoice I'll retain 5% of the amount. Okay, this 5% I'll repay after the certain, after my inspection. My engineer will inspect the construction, and if they say that yes, it is in line with the agreement, then I'll release this retained 5% amount. So the for that releasing the retained amount, we will be using the retainage release invoice type. Okay, let us proceed with the standard invoice type as we are creating the standard invoice. Okay, description you can give, if you wish any description you can give. The date is the invoice date. Payment terms is the immediate payment terms, which means the immediate which means the payment has to be generated immediately, and this option got defaulted from our invoice options. Okay, terms date basis is we discussed about this concept while discussing on the invoice options, right? Terms date basis is uh, for uh, for the starting point, the payment terms. Let us say it is, since it is immediate, let us say the assume that this is the let me change it. Okay, okay. Let us say assume this payment terms is the net 30. Okay, net 30, which means that after 30 days you need to make payment against this invoice, which means this $100 has to be paid 30 days from when, from when, what is the point this 30 days has to be counted, right? This terms date basis is the starting point for the due date to be counted for your payment terms. Okay, how come this terms date basis is defaulted to the March 3rd 2023? Because while configuring the invoice option, if you can go back to your invoice option screen and check, there is a called term called terms date basis. Against that basis we have selected the option as invoice date. Okay, that is why whatever you select here, that gets default here. Let us check if something we move. Can you see the date got changed automatically, whatever the date you put over here? That is how the, that is how the default function works. Okay, and requester is the person who has requested this material. Basically the buyer from the purchase order. Okay, attachments is the invoice, is the area where you can attach the actual invoice, the physical invoice, the image or whatever the PDF invoice that you get from the supplier, that you can attach over here. Okay, there is an option called show more. It gives you an additional information, the additional hidden field, hidden data values which are there in the application, that gets showcased on your application. General, it defaulted some other values, goods received date, invoice received date. These are the additional fields that require to be entered while you are depends, again these dates are depends upon your configuration. Okay, if you go into the accounting, there you should see some additional values. Accounting date, which means this is the date account, even this date also. If you go and check in your invoice option, there is an basis called accounting date basis. Okay, this accounting date basis, maybe we have selected invoice date, that is the reason it has taken the invoice date. If it is defined as the system date, irrespective of your invoice date, it takes the system date, current system date it takes. Okay, liability distribution, liability distribution from where this account got defaulted. Manage, for the very first option we selected, first configuration we have done, right? Manage common options for payables and procurement. There we had set up the very first account was the liability account, right? So that account will gets default here. Similar, the same logic, the same account you can set up at the supplier site assignment page as well. While creating the supplier site, there is a column called supplier site assignment as well, right? At the assignment level towards the right corner, there is a liability account. If you go and check, if you can go and check, if you assume that if you have set up something else at the supplier site assignment level, that account will get default for that specific supplier. If nothing is specified, then it takes from the manage common options for payables and procurement. From that source, this account got defaulted. Again, where this account is going to be used, this account is going to be the credit leg of your invoice accounting. Each transaction each transaction create a journal, right? The journal will have at least one debit and one credit leg, right? So what, from where this credit legs comes, from this liability distribution on your invoice header. And from where this invoice header liability distribution got defaulted, from the manage common options for payables and procurement. This is how you automate the accounting creation process. You don't need to give the credit line each time you create an invoice. It is You set the default, and let the default value gets defaulted on your create accounting. Okay, the conversion rate and type, this comes in while you are creating foreign currency transactions, right? The document category, it is about document sequencing, we'll see that as well in later part. Tax tab will give you the taxation details, and the additional tab will give you the details about your the DFFs, descriptive flex fields. Okay, basically all this rounding attribute 1 2 3 4 5, the my group, DS comments, my date, my description, all these are created by the consultant like us who are working on the application. Okay, these are additional data fields. My description is someone has created, enabled and descriptive flex field. What is the purpose of descriptive flex field? See, there is a form. So let us say, let us go into the this form, let us go into the accounting. Okay, these are the default values, default data fields that Oracle gives as part of the Oracle form. Okay, assume that if customer wants to have track some additional information, in that case you don't have a feeder, you don't have a column to represent the data over this form, right? So likewise the accounting date, liability distribution, you can enable one more field over here on the form by way of defining the descriptive flex field that we call as DFF. Okay, so that is what you can see on the screen. My description, my date, DS comment, someone has defined this DFFs. Fine. Okay, so we had created, punched in the invoice header information, and as I said, the invoice structure, what I said, invoice will have invoice lines, right? So the line amount, I am entering one invoice, one line I am entering. Assume that I am going to enter two lines, then the proportionate amount, what is the line one amount, like what is the line two amount, that you need to specify over here. Okay, for the $100 USD invoice, I am going to enter one invoice line for an $100. So I had taken the entire amount. The distribution set, it is just to populate your distribution automatically, we will see that in the next session. But so this $100 is for which purpose, right? Let us say this $100 I have procured some stationery, and the stationery account should get debited, right? That is where you should select your account as mandatory. Okay, so this distribution you can set up over here, or you can set up in this as well, in the distribution. If you can see, there is an tab called distribution button, you can enable over here there also, but we will try to do here first place. Okay, let us go on punch in the distribution details. Okay, what is the account this amount has to be debited? Let me go and see if stationary account exists. So let us say these are the salaries, right? So I am paying salaries for the Apple Inc. company, right? So just select the relevant account from the list of values, and then click on OK, which means what we are directing to the system, saying that this $100 has to be go and book into this account. Okay, so there are additional fields which are required, which we will discuss as and when we discuss each of this concept. Okay, just for the time being, to create the invoice, these are the required fields you need to punch in. Okay, once the invoice amount and distribution combination is given at the invoice line level, just click on save. You must provide value for the payment currency attribute. Okay, why it didn't got defaulted? So I'll check at the invoice options. I think it is not there maybe. So just save it. Okay, my invoice got saved, but can you see at the top corner, top middle of the page, here it is showing as not validated, which means the invoice is not validated. This is one of the steps that you need to follow while creating your invoice. What are the invoice actions that you need to perform on the invoices? Whether you save it or not, save is the optional for you. Once you save it, the draft invoice will be created in on your application, right? Once the whether you save it or not, but invoice has to be validated. Saving is optional, but it has to be validated. Okay, once you validate, what happens is system does some certain validations. Okay, Oracle in the back end. So in the back end, what happens when you validate the invoice, it checks whether the values whatever we give on the invoice screen are in according in line with the validation that Oracle set up or not. Okay, if something gets failed in the validation, then the invoice will be put on hold. It the status will be, maybe it will be put on hold, or it will be status will be updated needs revalidation. Okay, then how can you perform the task called validate? Go to the invoice actions, and the third option you can see as validate. Just click on it. See, it is validating whether the invoice is going through the validations that are conditions that are set up by Oracle or not. So it is went fine and it validated, which means the invoice is validated, which means the invoice is created and it is a legal invoice. Okay, so how do I validate the invoice from the invoice action? But assume that I have hundreds of invoices which are created or maybe which are imported. How do I validate invoice? Do I need to go to the invoice actions manually for each of the invoice and validate it? No, you can invoice validate invoices is the program which you can trigger from the schedule processes. Okay, even that program, what it will do is depends upon the parameters that you give, depends upon the parameter that you give, and the based on the parameter, it validates the invoices which falls under the parameters criteria selection. Okay, so two ways you can validate the invoice manually as well as by submitting a program, right? So once the invoice is validated, generally it goes into approval. Generally, what is the process that you do is, so when you create an invoice, when a manual invoice is created in the Oracle applications, right? In any business, it goes for the approval. If generally what happens is in majority of the cases, customer says, see, the invoice can be a manual invoice which is which is not linked to purchase order, which means a standalone invoice which we created. And there will be cases where you will be creating an invoice against to purchase order, right? Where you procure the material, the procurement happens based on the purchase order, and the purchase order, against the purchase order, the shipment, the invoice will be issued. The invoice will have, invoice document will have the purchase order details against this invoice has been issued. So by creating your invoice, you will be selecting the purchase order number as well. So that is where the matching happens, and that is where the invoice, that is where the application also does validation. Okay, so in that case, what happens is, since the purchase order goes into the approval process, whatever the invoice that you create against to purchase order does not require to go for approval process. Okay, but whatever the invoice that you create manually inside of your Oracle application which does not reference to any purchase order, then obviously that invoice should go for approval, right? That is the general concept, right? I mean, why? Because see, then the next question maybe the next question arise. If I don't have, if my business doesn't want any invoice approval, how do I do that? Still you can do that. You don't need to, you simply, it is job is simple. You don't need to enable the invoice approval. In that case, whatever the invoice which is created, it is directly will be available for payment. Okay. But if the business says that my invoices which are created without PO, then these invoices has to go for approval. Then we need to enable the invoice approval, and we need to write the rules saying that non-PO invoice has to be go to the approvals for depends upon the what criteria. Again, you are an employee, I am myself is an employee, we are creating invoices, but these invoice who has to approve? Your manager, my manager, or depends upon the amount. Let us say I have created $1 lakh US dollars invoice, and this invoice has to be, my business says that this invoice has to be approved by my vice president. How do you do that? This entire process we will be defining in the invoice approval process. These rules will be defined in the invoice approval. If the approval enabled, then you need to go and initiate the approval. Okay, initiate approval is the button where you can see that once the initiate button is triggered, then invoice finds its own rules, depends upon the invoice approval rules that we set up. It finds the rule to whom the invoice has to be routed for approval. Okay, that is how the approval works. Okay. So since we haven't enabled the invoice approval for now, so we are just going to account this invoice. Once the invoice is created and validated, then it is available for you to account. There are two options which are available: post to ledger, account in draft. So what is the difference between these two? Both post to ledger and account in draft both serves the create of your accounting, but the difference is it is just the accounting draft. What it will do is it creates an accounting, but the accounting will be in draft mode. It is just only kind of in draft mode, which means it is not yet transferred to GL, not the final accounting. Why such option is given? Because when you create this when you are giving these distribution accounts, this account will get debited, right? There are certain conditions where the custom rules also. See, whatever you specify over here, this account is gets debited. That is the thumb rule, the straightforward rule that comes from the accounting standards. But there are certain situations where you will be customizing your accounting method to derive the value something else. Okay, so we will see that as well. But that is what you talk, that is what is the combination of customizing your subledger accounting method. Okay. So so to view the accounting, before make it as final, before make it transferring to GL, you want to view the accounting inside of payables. The option is given by Oracle is the accounting draft. Okay, just click on accounting draft, and then you can click on the view accounting. Okay, if you can see view accounting, there are two lines of the accounting. One is the debit and one is the credit. This is the obvious thumb rule, right? Debit and there should be debit and credit. This is a double entry system that you talk if anyone is from accounting background. Okay, so my debit should be equal to credit, my $100 debit and $100 credit. Okay, and the debit line whatever you see is 8101 account is has derived here in the accounting from the invoice distributions whatever we given. And the credit leg of this accounting is the liability account, which is defaulted from your invoice header, and the invoice header value got defaulted from your managed common options, right? But while creating accounting, did we give this account manually, the credit liability account? No. It is that is how the ERP works. Somewhere you set up the default, the default will be keep on using as the process goes on. Okay, so this is how the draft accounting looks like. Okay, the draft accounting, again one more point, this draft accounting is just a draft. You can see the status as draft at the top right corner. Okay, it is just the draft, and you can even see further details as well. This invoice transaction is going booking into which ledger, you can see, and what is the accounting date, you can see, and the draft status also you can see. Okay, and this draft accounting will never create a journal. It will never create a journal. It will never transfer to GL. It is just for you to reference whether the account, what is the accounting entry this journal this invoice is creating. That is just for you to validation purpose. Okay, when you say you, it is the business user. Okay, so assume that this draft accounting looks fine, then it is your job to finally account. Okay, when you select the post to ledger, it creates a journal. The status, can you see the status got changed to final, and which means for this journal entry, the debit and credit, the sum journal already got created and transferred to GL. You don't need to do the import process manually. Application will itself takes care of that activity. Post to ledger, which means it will transfer this journal to the general ledger for the dedicated for the specified primary ledger. We can go and check that journal in the journal in the ledger as well. We will see that as well. Okay, that is how the post works. Again, one more question. Post to ledger, this accounting, do I need to come back to the invoice page manually for each of the invoice? No. Even this, for this also, to post to create the accounting for bulk invoices, we have an accounting program called create accounting, which you need to trigger, depends upon the parameters, and based on the parameters it selects the invoices for which needs to be select as scope in, and for those invoices the accounting will be generated and transferred to GL. Okay, this is how you create an invoice. Let us go and check in the GL whether the journal, whether the invoice, corresponding invoice journal is created or not. Right, journal, manage journal. Right, the period is March 23, and my source would be the payables. Right, so let me select search with the payables and click on search. You should see the invoice for $100. The March 20th purchase invoice got created. Right, let us review the journal. Right, the payable, the source is the payables. This invoice has, this journal has created from the one of the transaction from the payable source. Right, and the category is the purchase invoice. That is the purpose of the purchase invoice. And what is my, debit, what is my credit. This is 8101 is my debit, you can see, and my liability account got credited for the same whatever you see. The process is journal input process, that got created the journal. The import process created this journal inside of Oracle. Okay, so even one, this is one of the option where you can see the invoices. Okay, this is what we see. This is the invoice details that Oracle shows. Just click on the hyperlink. What it shows against the amount, there is an hyperlink button. So can you see, once I click on the hyperlink of debit account, it has taken me to the another form where it has given the line further details. This is what we call in Oracle is the drill down to the original transaction. This is one of the useful and one of the beautiful options that Oracle gives. From the source, from the journal form, you can drill down, you can reach out to the source transaction as well. See, we are in general, we are in GL, we have opened the journal. From the journal line, it is giving me the transaction number. What is the transaction number? What is the transaction number and what are the details? Okay, so what are the payables and what is the code combination that got generated, and if you expand that one, it is even given me the from which supplier this invoice is got created. Till that point it has given me the details in the journal line level itself, but it further gives you an option to view the transaction as well. Just click on view transaction. See, it has taken you to the invoice invoice creation form where the invoice was created with all the invoice details. That is, this is how you can drill down to the source transaction. This is we call as drill down functionality in Oracle. Okay, just click on down, which which means we are exiting this journals, the transaction source transaction to the original transaction, which is journal. We are in, now we are in journal form. Similarly for the same, from credit line also you can click so that it will takes you to the source transaction. Okay, save and close. So this is how you create a transaction in Oracle payables, and the corresponding journal you can visualize in your uh, general ledger module, GL module, against the primary ledger. You can go and verify. So before winding up today, any questions on the invoice process?